Hello, everyone. Good morning, John. Little clicky here before. Good morning, Patrick. Good morning, Sterling. I was wondering what happened to you, and like I thought you got tied up with work, and then all the news and everything comes in, and it's actually in order. So it's only gets scrambled when it's put in before the live stream starts, because now everything's in perfect order. So we'll scroll back there. Let me get some good mornings out of the way. Good morning, Jacob. Good morning, Ted. Good morning, Anissa. Where else? Good morning, Mark. Good morning, Royal Palms. Who else? Hey, Richard. How are you doing? All right. So we have some things coming out this morning. We have retail sales. We have retail sales coming in lower than expected. Lower than expected for retail sales coming in at 0.4 versus 0.6 consensus in the prior was 0.8. So December drop in retail sales. Export prices coming in a bit higher than consensus of 0.3%. Again, this is not disinflationary. Import prices coming in line with consensus. Jobless claims bouncing. Unadjusted jobless claims. This is the adjusted number. Unadjusted, which is not on this chart, was like over 300K. So that's pretty interesting. But higher than the consensus. Continuing jobless claims, which is right here, is better than expected and better than previous. So we also have the Philadelphia Fed Manufacturing Index off the charts, hot prior minus 10.9, bouncing all the way to 44.3. We see some bizarre things with these numbers, and there's not just these recent ones. It's been going on for a couple of years now. But if you look, jump in business, Philly Fed business conditions, prices paid. Another jump in prices paid right there. By the way, retail sales at 3.9% year over year. So far, nothing that really upset the markets. So we'll continue the rally today. What else do we have? We don't have much. We have the NAHB Housing Market Index, and that's really about it, but nothing's major. And then tomorrow's a quiet day in terms of releases. In terms of the map, we got, by the way, a lot of the rally yesterday was done by Tesla. Tesla up 8% yesterday. Now, we got some chips bouncing today, although let's see if Sterling has it in here yet. He probably does with the earnings. TSMC was, I thought it was a beat miss. I had a beat miss on that. Am I wrong? Oh, look at that. TSM. There we go. Yeah, I had, all right, sorry, a misbeat. So it's up on this, but I had it missing on earnings. So slightly. But look how well the harmonics really worked here. Spiking up over the last little bit. This is a weekly. Topping out for multiple weeks at the harmonic cluster, and then popping and reversing at the next harmonic. So if you're trading TSMC on a breakout, if this does break out higher, your next target is 233. All right, let's get back to the map and the chat. There we go. United Health was a beat miss. Bank of America was a beat. Morgan Stanley was a beat. So far, the banks are all pretty much beating. PNC beat. USB, Bancorp beat. So what else? We don't need to go through all these. It was 18 degrees yesterday for Richard, but colder coming next week. It popped up this morning. We're going into another cold streak. It's going back to the 30s in the morning, but today it was like 52 degrees in the morning for the dog walks. Thank you, Sterling. Maryland is not, as they used to say in Texas, where I moved from. Chilly tonight, hot tamale. Man, I love tamales. So, hey, Kofifi Bros, thank you for tuning in. Yeah, earnings whisper says it's a beat. What was close either way, and it's up. Hello, Charles. All right, let's get to, now we said good morning. We've got through that stuff. So, chips are stronger this morning. Uh, Other mega caps, Tesla slight pullback. Tesla did trigger a little mini double bottom yesterday. UNH after their earnings is pulling back. Google, Meta, and Tesla are pulling back. So we sort of have mixed. Besides Nvidia and Broadcom really powering things higher this morning. Groups, technology is by far leading it. So again, after the better than expected CPI report, I mean, I just think the markets want any excuse to rally still, because it wasn't really better than expected if you peel back the scenes. Fed Watch, though, has it with the first cut now in June, but only one cut still priced in based off Fed Watch tool for next year, starting in June. Before it was September, and now it's June. So the market screamed higher. The fear index still in fear. Schiller PE close to 38 again. So let's take a look at some stuff. The S&P coming up. My target yesterday, if we continued to rally, was the 59.97 area, which we stalled out. We poked through it and closed just below it. On any rally up, my key target area is 60.2850 to 60.43, and my first initial target is 60.28 if we do rally today and take out the earlier high. On any pullback, the very key area I'm watching is 59.80. And then more significant would be about 59.50 if we did pull back. Those are the two key areas I'm watching for the S&P. But on a breakout higher today or tomorrow, or if it pulls back a little today, then we get a rally in the European session. Again, 60.28 area is very key for me. Now, we still are technically in a downward pattern, but we have cycles rising on the daily and on the weekly. So could it take a while to roll over again? We don't have much coming out tomorrow. And in terms of earnings, where are my earnings? In terms of earnings, we went through today's, but in terms of earnings after the close today, not much. And tomorrow, very little. That's going to be market moving. And there's not much releases. So unless something comes out of the blue to really rock the markets, we could consolidate and hold up in this area for a bit, at least starting off into next week. Remember, we have inauguration on Monday and Martin Luther King Day. So, NASDAQ also coming up to the top of the channel line, and the target was the 50% harmonic, as I talked about yesterday. We didn't get there yesterday, but we got there this morning. 21,560. The high today, 21,567. So just poking through that. If we continue through that, there is not much other key resistance. Remember, we have a clear path move. There's a minor breakdown zone, which for any longs, at least I'd raise a stop at around 21,690 to 21,700. And then the next key target is 21,776 to the upside. Very, very, very major support is about 21,350, 21,360 area. So on any pullback, that's what I'm looking for. We also have cycles turning up on the NASDAQ. Good morning, Heinrich. What are you in Chicago, Coco? I'm not in Chicago. Coco is freezing. My wife's in Chicago. She said it wasn't as bad this morning, though. She didn't freeze her face off walking to Starbucks. Have I found that harmonic levels are stronger in trend lines? That's a blanket statement, and I hate making blanket statements. Longer-term trend lines and longer-term harmonics are both very important. In the shorter term, harmonics outweigh trend lines. But trend lines give me an area, like on the NASDAQ. You see where we had the declining trend line, we had the defining point back from Monday the 6th, we had the initiating point back from the 17th. We spiked up here, but look at, remember, I watched for clusters. So we had a cluster right there. A cluster right there. On the S&P, we had an offset cluster, but it was in this area that I'm watching. Okay, this gave me an area between trend line and the 50% harmonic. Remember, Between the 50 and the 62.5, that's where it's got to do a lot of heavy lifting, because this is where I'm watching for the potential rollover zone. Although it's have to have something really come out of the blue to get a significant rollover in the next couple days. The Dow, after the percent beat buy on Tuesday, followed through a little pullback right now to a very key support level. A very key support level. It can even pull back slightly more. About 43,200 is very key that I'm watching for. UNH is going to drag on that a bit with their earnings. So in terms of to the upside, I'd be looking at the S&P and NASDAQ first on the breakout plays to the upside. The Russell coming up to a very key resistance level and holding back. So on any move above 20, really on any move above 2285, there is very key resistance, 2297 to 2300. So I'd be watching for some selling pressure up there. The key support level in the Russell is now back at 2250. The VIX can't really seem to drop below 16 easily. It's trading right there now. We've had this pretty decent floor. If it does, then I'll watch for a little more sustained rally mode, but we really need to get below that 16 from that perspective. The DAX eking out new highs, not invalidating the double yet, coming up next to harmonic. So there's nothing really else to do. If the DAX continues, the major cluster is 20,950. Notes back to the rotation zone. I'm going to see if this pulls back a bit and forms like a head and shoulders bottom, which, because remember, we're really offset from the still weekly rotation zone. So either I'm watching for consolidation or even a continued rally in the notes, which would be another pullback in the yields. You see this. The major support is about 4.55. 4.5 to 4.55 on a weekly basis. But I'll be watching to see if we make a little head and shoulders here and then pull back even more. We don't have a lot coming out. We have the Fed. Remember, you have the Fed. Where is it? You have the Fed decision in just under 2 weeks, and which is on what date is that? What date is that? I don't have my calendar in front of me, but it's 2 weeks yesterday, so it's always on the Wednesday. So we have that coming out, and then you have the PCE numbers. So there isn't a lot to really shake up the markets. Those are the next two things, and the Fed is going to pause. The market's fully expecting that. So, dollar index. I am paying attention to yesterday's high because a close above that, first a break above that. We've pretty much topped out near yesterday's high earlier today. But if we blow through that and close above it, it would be a rotation zone and a percent beat buy. It is against daily cycles, and weekly cycles are rolling over. So I'm being patient on any longs with the dollar index because this could consolidate also or even pull back more. Crude. Again, crude continues to march on a lot of commodities. Remember we talked to, what was it? The TRJ EFF, or Thomson Reuters Commodity CRB Index. Look at this. On the weekly basis, last week closing up well above the 62.5. Now we already taken out to 75. Look at this on the monthly basis. Either this is setting up the mother of all double tops, or we could be breaking out and really plowing higher for some commodity prices. So there's still upwards pressures building on commodities. So back to crude. Crude is still holding in there. So I'm watching for a topping pattern, and that would be for a minor pullback at this point. But crude continues to keep surprising to the upside. Would I be loading up longs here? No, I would not. I'd be watching for some kind of pullback, at least into the daily rotation zone. Gold. Looks like today is the day unless a lot of selling pressure comes in, if we close above 27.30, we're above the 62.5, which shifts at least the short-term probabilities to retest the highs from end of October, and we could then be completed with the longer term correction. Remember, I was watching for a longer term correction and then another breakout move higher. So paying very close attention to gold today, because then I'd be more aggressively looking for pullback trades. Silver also toying with that 62.5. Now this doesn't take you close to October. The key level for silver is really 33.11. 33.11, which would also take it above the closing high from December 11th, where it stalled out. So that's the really key level you're watching for silver. In the short term, I'm looking at 31.76. You're shaking out of your natty gas on. Natty gas has been. Natty gas, look at this volatility. This has not been easy. I mean, you look at the Monday, major gap up and reversal. Now slowly climbing up. Look at this. You had a gap up, then a 2-day drop back in the rotation zone, and then it went in launch mode. This has been a really tough trade. That's been really tough. So you're pausing the JGB 10 years after eking out a new high yesterday. And now I'm watching for the bigger pullback now. And bigger pullback, we've pulled back to the weekly rotation zone. So this would still be roughly a sideways correction. I'm just being patient. I'll start looking for daily with cycles getting to bottom. Like we could be setting up for a percent beat buy. Don't know if it'll trigger tomorrow, but going to be watching for that because we have pulled back to the weekly rotation zone. Euro, not much to talk about yet. We could be forming a little head and shoulders, which then would take me back to the weekly rotation zone. It's just not completed yet. So we could be getting a little counter moves and some stuff that's been really overdone one way and then a bigger pause in the dollar. Spiders, the key level still to watch for on the spiders, which technically does not invalidate. The invalidation point for the triggered double top is 598.51 on a closing basis. The key area I'm watching in the short term is 596.43 on any continued rally. We're trading 593.86 right now. First, I need rollover or weakness in the open. I'd be watching for the gap fill of 592.78. If we did break below that, you have major support right around last Wednesday's highs and yesterday's gap open. 590.33. On the Qs, trading 519. Yesterday's close 516.70, so that would be the key level I'd be watching on any pullback level. We're trading against a 50% harmonic right now going into the open. All right, above there, the next key level is 524.36, but that does not technically invalidate the double. The technical invalidation point for the double is 527.95. All right. By the way, also on a rollover play for the NASDAQ, you have the key reversal open on Friday, January 3rd, and yesterday's open. That's going to be very key level of support, 513. Bitcoin, no close above the 62.5 yet. Not much to talk about there. What else do we have? Tesla, we have the little mini double bottom pattern that could potentially take it back to the highs from mid-December. Did trigger yesterday. Little gap down today. But this was driving force in one of the big driving forces in the market rally yesterday, up 8%. Off nothing. But targets are 451. And remember, you have a gap left behind here from Thursday the 26th to Friday the 27th. Just above the first target. Next target's 463, and final target's right around the 87.5 harmonic, coming in about 475 area. So those are the targets. What would be the point of invalidation where this trade would no longer be viable is a close back below 393 or an intraday trade through 386.40 roughly. So You're showing a weekly inverted head and shoulder natty gas with a double right shoulder. I really do not like double right shoulders, but we'll take a look at it. Let's take a look in the weekly. See this, I can't trade that as a head and shoulders. It's just too, it's too ugly. You know, I'm still watching for the reconnect with that 87.5, the 4.47 price point, and then it gets into it's getting into a major resistance area right now. That's not to saying that we can't still go higher. It's that I'm watching for to see where it holds on any pullbacks. But I cannot trade that. This is more of just a downward sloping trend line break, establishing a new short-term trend. All right, what else do we have? NVIDIA, again, still holding very key support, trying to bounce here, but these bounces are going to be very interesting in things. Because right now in NVIDIA, if this can't get above 144 again, watching for a rollover play. Broadcom, again, a little bounce here, have not triggered the pattern yet. Now, if this gets back above the 243, it's the daily double top would be off the table. Okay, that would be this pulled back far enough that if it went back up here above 243.31 to be exact, the potential double top, which is never confirmed or triggered, would be off the table. Other than that, Apple, I'm just going to watch for a rollover play coming up. If it continues, if it can get even to about 241 area, and you still have a gap left behind back to 242.70, but all this is in the rotation zone. So we broke down, little rally here, and Apple was up nearly 5% yesterday. Again, it was buy everything yesterday. So I'll be watching for a rollover play in Apple also. XLF off 100. Which is one of the moving averages. That's probably was right about here, wasn't it? It's going to be interesting to see if this put guts into double top territory on the XLF and can get above 50.47 again. It'll be interesting to see if that sets up a larger double top. We've got the final pullback to the rotation zone, which is when on the weekly rotation zone has been holding, but this is really starting to top out. So I'm going to be watching to see if this forms a double top. That's going to be very, very key for me. All right, let's just peek at the S&P going into the open. Not much. Again, little support shelf into the open is that 59.96 area. So that's what I'll be watching along with the tick to see how we opened. Other than that, not much to talk about. Other than that, not much to talk about. So I hope, let's see. The market is still underpriced. Okay, Coco. We're still going NASDAQ 25. All right. Well, there you have it. And with that, I shall talk to everyone tomorrow. I hope you all have a wonderful trading day and stay warm out there. Bye for now.